Well, happy Friday. It is Springfield's Morning News. I'm Greg Bishop on 92.7 WMAY, Springfield's News and Talk. And let's talk about pension funds and how they're being impacted by FTX, that failed digital currency exchange that's filed for bankruptcy on Veterans Day of all days back last month. Now, that has caused ripple effects across the investment industry, and we've been seeing some stories pop up here and there about certain public pension funds being impacted by it. In particular, there's a Canadian pension fund that's been in the news and a whole host of other funds across the country that may have had some kind of direct or indirect exposure to the FTX collapse. And we're talking a $3 billion debt is what FTX says that they owe creditors, but some have estimated that the overall impact could be 10 times that. So it's still something that we don't have all of what happened with FTX, and the U.S. House committee is set to investigate that. But how is it impacting Illinois investments? It's Springfield's Morning News. I'm Greg Bishop on 92.7 WMAY, Springfield's News and Talk. And you can always chime in live and local at 217-629-7970. It's the phone number. You can also email me, bishoponair@gmail.com. Follow me on Twitter, Facebook, Instagram, YouTube. You can even go to the YouTube channel Bishop on Air, where you can see some live call-in segments and interviews and so on. But FTX and pension funds, what's Illinois' impact? Earlier this week, the IMRF, the Illinois Municipal Retirement Fund, which is considered the most healthy fund in the state of Illinois, and they provide the investment tools and strategies and payments to local government retirees. So again, it's the Illinois Municipal Retirement Fund. They posted on their website this week. Here, I'll just read this to you. IMRF has recently received questions regarding investments in FTX, the cryptocurrency exchange that declared bankruptcy. The developments at FTX are concerning, and we're monitoring the situation closely. Through our venture capital asset managers, IMRF's indirect exposure to FTX represents less than 0.01% of the total IMRF portfolio. Partnering with a diversified pool of venture capital asset managers that have broadly diversified strategies minimizes the brunt of any one investment loss for the fund. Be assured that as a risk management tool, IMRF's portfolio is diversified across asset classes, managers, strategies, sectors, and geographies. In a word, we don't put all our eggs in one basket, and we continue to manage a stable and well-performing portfolio. Now, again, IMRF is independently managed from the state's 5 other pension funds, like the largest, the Teachers Retirement System. So IMRF announcing that 0.01% of their portfolio being impacted. If you look at their total portfolio, it's about $45.5 billion. So 0.01% equates to about $4.5 million that may have been impacted. I reached out to Wirepoints President Ted Dabrowski to get his reaction to this, and here's some of what he had to tell me yesterday when I talked with him briefly.
Well, they're letting us know that our pension funds are invested in very risky assets, and there's been massive losses, or there will be massive losses in the billions from what's been reported. And so we know that one of our pension funds is invested in this crypto type investment. So I think it begs the question, what about the rest of Illinois' pension funds? And are the risks managed and controlled? Every single pension fund should be answering that question and being transparent about it. Now,
I did reach out to the Teachers Retirement System, and they have, again, the largest liability of Illinois' pension funds. And a spokesperson said that the FTX bankruptcy has had no effect on the TRS portfolio. TRS has no direct or indirect investments
that's what
in cryptocurrencies. So that's what TRS is telling me. Also, I looked at the Treasurer's office and asked them, because they manage $50+ billion of different public investments. And the Treasurer's office told me that none of its $50+ billion of public investments are invested in digital currencies. But again, back to IMRF. They do report about $4.5 million that could possibly be impacted here. And while that's 0.01%, Dabrowski says it's still important.
Yes, if what IMRF is saying is true, then their position is very small. But it does kind of point to something that, investment funds, pension funds are having to take big risks these days in all kinds of different risky assets trying to make the returns. And so, yes, it might be a small amount now, at least what's been reported, but we need to understand what kind of risks all of our pension funds are taking, given how difficult the markets are today.
Now, the response again from the teachers' retirement system saying they're not invested in digital currencies. You also have the Treasurer's office saying that they don't invest in digital currencies. But IMRF said it was a venture capital asset manager where they may have had some exposure to the FTX investment, and that begs the question of just how deep of a dive should we go to see what kinds of risks there are. Here's Ted Dabrowski.
Yeah, well, that would be good. But I think what we need to know is not just direct investments, but indirect investments, because as we're finding out, there's all kinds of different funds that probably didn't know they had money in there, or they have significant amounts of exposure to FTX. So every one of Illinois' pension funds, and including the Treasurer's office, they all need to be very transparent about what kind of investments they have in FTX and similar type investments, and they need to do a good audit to ensure that they report their direct and indirect exposure to FTX.
And what about some final remarks here? Final takeaway from Ted Dabrowski about at least one public pension fund in the state of Illinois being indirectly impacted by the FTX collapse. Again, Ted Dabrowski from Wirepoints.
It's not just risk to FTX. We should understand our pension funds and whether they're making bigger and bigger risks, given how hard the stock market and bond market has been. So we really need to see a lot of transparency coming from all of these pension funds.
Meanwhile, you've got the state's pension funds posting liabilities that have increased. You've got Bloomberg reporting that Illinois' debt to its employee retirement fund rose as the pensions were hammered by investment losses, erasing some of the bull market gains and briefly clipping away the state's obligations. The unfunded pension liability across Illinois' 5 systems rose 7.5% to $139.7 billion for the fiscal year that ended in June, based off the market value of their assets. So obviously, you want to have clean investments. You want to have safe investments. And when you have a market that has a lot of volatility in it, it might lead to some wanting to take riskier bets. But some of these pension funds can't afford to do that. You've got, again, 5 pension funds in the state of Illinois, and the average unfunded liability is like 44%, 45%, or something like that. That's horrible. Even Fitch says 90% funded that the state hopes to get by 2045. That's they want to get to 100%, not 90% and 46% or whatever it is right now. It's pretty abysmal. So yeah, the unfunded liability, obviously something that's very important to keep an eye on. At the same time, what kinds of investments are these public sector pension funds